So depreciation on motor vehicle, it is 25%. 25%, then 20% is what you take to cost of sales. 80% will go to distribution. So you will take 25% times the cost of motor vehicle. Cost of motor vehicle, if you check keenly, in the trial balance, you'll be able to see motor vehicle is 120. So you take 25% of 120 times the cost of motor vehicle, which is, they want us to classify 20%. So 20% of what you get goes to cost of sales. So can you give me the entire amount? The entire amount. So tusaidiane figures haraka haraka, unajua sina mtu physical, ndio tusonge at least. Because also we have to finish that question, tutaiacha hanging. So how much? 25% of 120 times 20, what do you get? $6,000. So this is 6. Give us there 6. Tujaribu kufanya hizi answers mbio mbio ndio tusikwame. Let's check another note which may affect cost of sales. So note 2 is done. Note 3 investment, no. Note 4 they have said we are going to classify it in administrative. So leave alone note 4. Note 5 included in the operating expenses. Hiyo ni mambo ya operating expenses, ignore. Note 5, the company is yet to account for redundancy cost. Redundancy cost is the cost you incur to lay off staff. So the cost you are incurring to lay off staff should go to administrative. So we are not going to bring it here, ignore. Note number 7, after computing the cost of sales, the management was made aware about an error with the inventory module in the accounting software, which understated the opening inventory by 10 and the closing inventory by 15. The amounts are considered material based on the company's policy. So there was understatement. Of opening stock by 10 and also understatement of the closing stock by 15. So in this case, when you understate closing and opening, the cost of sales as an expense will just be the difference. That 5. You have understated the closing. It means closing you have understated by 15. Opening you have understated by 10. So the net understatement is just 5, not 25. When you understate opening, opening is supposed to be added. Nasemanga add opening stock. So opening stock, let's say, we understate na 10. Then we normally say less closing stock. So if you understate this, so if it will be minus 10 understatement, minus 15. So the net understatement will be just 5. Actually, positive 5, that is. So in the cost of sales, the net effect will be understatement of 5 because closing understated by 15, this one understated by 10. So the net understatement should be 5. So you come here and say less, you need to subtract less inventory understated. So when it is minus 10 minus 15, which is 5, but now the positive 5 is like an overstatement. So you will use it to reduce the cost of sales. The cost, if you understand this and you understand this one also, then the net effect will be a positive figure. So positive means the cost of sales was overstated by 5. So you subtract that 5. That one is quite shaky, but I hope you understand. This one was understated by 10, but closing stock must be subtracted. So it's minus 15, which is plus 5. So the net effect is positive 5. Positive 5 means the net effect is an overstatement. So overstatement means the cost of sales was overstated by 5 million. So you subtract. Good. Note number 9. Note 9 is about tax. Note number 8 was loan stock. So cost of sales, those are the only adjustments. Give me this figure. The figure comes to how much? 180, 550 confirmed. 180, 550. So in Ingiwaladia issue is stock. But if you take it this way, you will find a positive. So positive means the net effect is overstated by 5, which you need to subtract. Allow me to, if someone there is nobody with a question, allow me to go to administrative or distribution. Cost of sales. Let's go to distribution. So working 2, let's check distribution. Jacinta, and if it was overstated. So assuming this one was overstatement, this one was also overstatement. So it means it will be 10 minus 15. So the net effect will be understatement of 5, which now you come and add as part of cost of sales. So just test it with the wordings. Overstated is positive. So it is just this minus this. Come on, negative, you add back. Positive, you subtract. So Jacinta, I hope that is okay. Let's go to distribution. Good. Let's go to distribution. Distribution, reported. You start by saying reported. So distribution reported. Iko wapi? Who is seeing the figure? Nani naona hiyo figure nisaidie nayo? Who is seeing the figure? Nisaidia nayo. 15,700. 15,700, correct. I've also seen the same. 15,700. Which note should I check for distribution? The one which additional information for classification purposes? Which note? Note number 2. So note number 2, the depreciation of this one here, motor vehicle. So depreciation motor vehicle. So motor vehicle, 25% times 120 times 80. Here they say we take 80%. So give me the figure. $34,000. There was nothing on distribution, so just add that one. Just add. Then working 3. Someone has requested for me 3 minutes. I've seen an inbox on my phone, 3 minutes for prayers. I don't always compromise on that. So let's pray for those 3 minutes, then we proceed. Otherwise, we are going to admin. Admin expenses. So start with reported. Start with reported. Reported. So let's pray, then we come back. Now, I'm informed it is over. The person who requested for prayers confirmed. That is done, so we can proceed. So reported administrative. The reported administrative, I can be able to say 3750. Oh, you can also see the same. Then can you tell me the notes to check for admin, please? Tell me the notes to check for admin. Mkiniambia hii tunaangalia hivyo hivyo. Then I can check if we have checked all. So which notes should we check for admin? The first one. Check, let's check 2. So 2 for depreciation. Depreciation for building and furniture, those 2. So depreciation for buildings for buildings. So buildings 2%. 2% at cost. So times 300. So give me 2% times 3. What do you get? $6,000. Then F, furniture and equipment. Furniture and equipment. So furniture and equipment, 20%. 20% times the value of furniture was 131 to 50. So give me that figure. Multiply and help me that figure. So that one comes to 26,252. 26,252. Kuna disconnect. Moses, check. 26,250. Okay. So 26,250. So that is in regards to note number 2. Any other note? Any other note which you have seen and you feel should be part of admin? Which note, which note, which note? Note 4, please. Consolata is saying, let's check note 4. So note number 4. Note number 4. They are saying the company has assessed the expected credit loss on trade receivables and has summarized the following details. Probability of default, then amount. The expected credit loss is classified as an administrative expense. So, just a minute. Okay. So, the expected credit loss become a provision for doubtful debts. That happen. So, expected credit loss. Say there, the expected credit loss. So the expected credit loss will be, you take the probability times that amount, probability times that amount. So this is 5%, 5% times 26,600 plus 20%, 20% times 12,600 plus 50% of 3,400. So can you give me the entire amount? How much? Get the entire thing? So many people have given me 55.50. 55.50. Is there any note which someone feels should be part of administrative? Any note which should be part of administrative? Any additional information which you feel should be? Zach, note number 5, Jacinta, note 5. So note 5 included in other, included other operating expenses is 10. This is the annual lease rental of the company, computer bill. That one is other operating expenses. So tutaitoa tu, we'll subtract it out. Last paragraph of note 5, the implicit interest rate is 10. Any depreciation expense is classified as administrative. Oh, okay. So there is depreciation on lease asset. There is a lease asset which they said note 5, included in other operating expenses is a payment of 10 million made on 30th. This is the annual lease rental of this year. So this year they paid 10. Although the company is treating the lease as fine, computer network equipment being paid, your computer, it doesn't make sense. The lease is for 5 years. So to get the total value of the lease will be, you take what they are paying per year, 10 times 5 times the 5 years, times the 5 years. So to get the depreciation, there is depreciation on lease. Depreciation on lease. So lease, they are paying 10 per year times 5 years. Then the value you get, you depreciate again for 5 good years. So the value of the lease item, the total cost is 50. So 50 divided by 5. That is 10. That is 10. So depreciation is 10. You just take what they are paying annually. Every year they are paying 10, 10, 10 for 5 years. So it means the lease is 50. So you take the 50 divided by 5 years to get annual depreciation. To get the annual depreciation. Good. Any other notes before we wind up? Any notes touching on admin? Any notes touching on admin, if any? Note 6, everyone is saying note 6. Note 6. The company is yet to account for redundancy cost at 25. The management made a proposal. Yeah. Redundancy cost is the cost you incur to lay off staff. So it falls under administrative cost. So provision for redundancy, 25 million. There is no any other note on administrative. So can you add for me accurately the admin? Add for me admin. So Rachel is saying 103, 550. I hope that is in order. Someone to confirm as well. Someone confirm 103, 550. Just one confirmation is enough. Yes, this has confirmed. Good. So cost of sales, distribution, admin. Hey, distribution is equal to happy. How much was this one is going to be? 39,700. That was our distribution. Good. Let's go to we go to which one now? We need to go to finance cost. But before we go to finance cost, there is something I want us to do. But it is really necessary. Yes, it's necessary. There is this lease. There is this lease. The interest on lease will affect our finance cost. So out here, working for, you call it lease amortization. Lease amortization. I want us to amortize the lease. I want us to amortize the lease. So you say here, balance brought down. Then finance cost. They said the interest rate was 10%. That is what they said. Was 10%. Then rental paid Then you get balance carried down. Have that before I do finance cost, because the interest on lease will affect our finance cost. So that is why I have to do that. All right, so here we are in year one. For this year, they say 2021. So 2021, balance brought down is 50. It was 10 times 5 to get the value of the leased asset. So we talk of 50, then finance cost will be 10% of this, which is 5. Rental, every year they were paying 10. They were paying 10. They were paying 10. So balance carried down will be 50,000 plus 5, which is 55, minus 10 to get 45. Get 45,000. Then in 2022, you can just go one extra year. I know why I'm telling you that. You bring here 45, 10% is 4,500. We are paying 10. So this is 39, because this is 45, it will be 49,500 minus 10 will be 39,500. So now, from there are 3 things which you can come up, which you can get from here. So please just, I don't know whether you left a space. I can do it here. Current, non-current, sorry. Kama kuna space niongezea hapa mwisho, non-current liability and current liability. It will help me. Joseph, lease is for 5 years beginning. Hawakusema vizuri, but it was beginning this year. Ni hiyo write up. No, the payment was made at the end of the year. It was made at the end, Joseph. So you cannot subtract. You can't subtract unless it was in advance, but they made the payment for this year. So it means it was made at the end of the year. Unless it was being paid in advance, it will affect interest, but it was being paid at the end of the year. So it does not affect the interest. I understand what you're saying. It can affect interest because it was being paid. Yeah, good. So non-current liability is long-term. So in 2021, here, kama ukikuwa kwa hiyo class ya lease, this is an opportunity you can understand this. At the end of 2021, the total outstanding is 45. Out of 45, what will remain not paid at the end of the next 1 year? So at the end of the next 1 year is this one here, 39. So you bring here 39,500. That is the long term. That is the long term. Then the short term will be 45 minus 39. It means that one must be paid in the next 1 year. So take 45 minus this 39. How much do you get? How much will that be? Somebody? 55. I hope everyone sees that. 5,500. Good. 5,500. I'm not concerned with the 2022. I only wanted for my year. Then this one here will be treated as finance costs for the year. So that is it. So working five, let's bring finance costs. Let us bring finance cost. Allow me to check what Paris is saying. Yeah, it was not very clear here. I thought we were moving Evo, but let me play around with lights. You want it. Kidogo too. Let me play around with the lights. Paris, confirm that one is somehow better. What's the same direction? Somewhere there. So the light is the one which was quite much. Perfect, okay. So let's go to finance cost. Let's go to finance cost. Finance cost. Finance cost. So finance cost. So if you check, kindly check for me. Check for me. Trial balance. Check trial balance. In the trial balance, if you are keen, you will see loan stock interest paid in the trial balance. So reported loan stock interest. There is loan stock interest of 5,000. Then interest on lease. Interest on lease is also 5. This one here. So interest on lease working not 5, check working 4. So total finance cost, which is interest, this is 10. That is 10. Have that. Higher. So working 6, income tax. So income tax starts with deferred tax account. Deferred tax account. Deferred tax account. You remember how we did it yesterday? Deferred tax account. Joseph? 10% loan stock on note 8. Allow me to check. Note 8, the fair value, effective. The par value of the loan stock will be settled in 2025. The effective interest rate is 10%, and the company has classified the loan stock at amortized cost. What is the value of loan stock? Loan stock, check in the trial balance. You don't go, Joseph. Where's the loan stock? Loan stock is 50. Check third, no, not third last, but second last. Second last in the trial balance. Check second last in the trial balance. You will see 10% loan stock is 50,000. So that 50 times 10% is the one which gave us the 5,000. So it has tallied with what they gave. I hope you have understood. The loan stock was 50, but 10% gives us still 5. Good. So check deferred tax. Actually, deferred tax is the last item in the trial balance. The balance brought down. Balance brought down. So balance brought down is 12,800. 12,800. Then now there are some small notes which we need to check. There are some small notes we need to check. Let's check note number. There is note 9. I think it's just note 9. I don't think if there is any other note. Check note number 9. So check note 9. Note 9, the corporate tax rate for the year is estimated at 35. That is the current tax, 35. The taxable temporary differences at the end of the year as follows. For adjustment to P&L, 47. For adjustment in revaluation, 3. Total 50. So you will take 30%. Balance carried down. Balance carried down. The total deferred tax carried down. You will take 30%. 30% of 50. 30% of 50 is 15,000. Is 15,000. But inside the 50, there is the breakdown. The adjustment to profit or loss. So to P&L, we only need to consider the one which is on 47. For adjustment in revaluation, 3. So revaluation, we need to debit the account so that we eliminate again. We eliminate the tax which is here as a result of revaluation. Because revaluation, I want to know what is going to the profit account. Revaluation is not taken to the profit account. So you need to eliminate tax on revaluation here by crediting the account. So you come here and say revaluation. So revaluation, you will take 30% times 3,000. So 30% of 3,900. Haya. So what the balancing figure is what we take to P&L. So P&L, this is an increase. 12,8 plus 9 minus 15. Inside the 50, there was 3. But 3 is on revaluation. Revaluation should not go to P&L. So when I subtract from 15 by crediting the account, that is what we have done. So the balancing figure, the BF, so take this plus this minus 15. So how much? 1,300. So the deferred tax is on 1,300. Wesley, Mwalimu, a question. How did we get balance breakdown of tax? Check the 12,8. Check the balance, the last item in your trial balance. You remember, Joy. Check the last item in the trial balance, the last in your T balance. Kindly check. Yes, the 50. No, it is not 50. 50 was new loan. 50 is the loan. Deferred tax is 12,8. Check well. The last item on the credit side, 12,800. 50 is the 10% loan stock. I hope you can be able to see that. So down there is nothing like down there. P&L, I hope you have seen it. P&L, deferred tax will take 13. Current tax, good. Current tax was mentioned in note number 8. No, note number 9 is 35. So with that, we can be able to kick off immediately with our presentation. Unless someone has a concern, we are good to go. Unless someone has a concern, we are good to go. We are good to go. Good. So right there, Vista Limited. OCI stands for Other Comprehensive Income. So Vista Limited, statement of financial position, statement of profit, stock loss, and other comprehensive income. For the year ended, so we start with revenue. Revenue, there was no working. There was no working for revenue. So pick it the way it is. So revenue is the one they call sales. Here it was called sales. It is 473. I don't know whether I should bring back the lights. Nikifika hapo kwenye na reflect nitatoa. So 473 to 50. $473 to 50. Cost of sales, working one. So how much was it, please? How much was your cost of sales in working number one? 180,550. Therefore, gross profits help me with the gross profits. So gross profit is 292, 700. 292, 700. Then we have a bonus check. There's a mistake we did yesterday, and we should be very keen this time around. We should be very keen. Other income, if we have other income, we should bring them before bringing any other form of any other form of income. So there is rental income received. Check. Rental income received. Rental income received, I'm seeing 2,400. I hope you are able to see it, the 2,400, but don't take it to the far end. The rental income received, bring it somewhere here, 24. Then on top, upper due, your rental income, there is investment property. I want you to check and tell me how much are you seeing. When you check the investment property, how much are you seeing? There's something I want to tell you about it. Yeah, that is true. It is 24,600. Then I want you to subject it to this note. There was a note, just give me a minute. I saw it in note 3. Check note 3. Additional information number 3. The investment property is being accounted for using the fair value model, with the fair value being 25. So fair value is 25, which is now 25,000. Then the book value is 24,600. So that increase in value should be brought here as part of other income. So fair value increase on investment property. Investment property, 25 minus 24,600. That is 400. Therefore, the total other income is 28. Have that. Good, we proceed. Now go to distribution. Working 2. How much was it? You have the answers, please. You can assist me. You can assist me with the distribution answer. It was how much? Somebody there? 39,700. Administrative, admin expenses was working 3. So that one, 103,550. Then before I went down, there was other operating expenses. We never did a working for that, but there's something small about it. Check other operating expenses in the trial balance. Hapo chini admin, in the trial balance, you will see other operating. So other operating in the trial balance, you'll be able to see 45. So you see 45 minus, check note number 5. Included in other operating expenses is a payment of 10 million made on this. This is an annual lease rental. Lease rental, when you pay lease, is like loan payment. Lease is a special loan. So you don't treat a loan, when you pay a loan, you don't expense. Repayment on lease is not an expense. What we expense is the interest. So you subtract it. It's not supposed to be part of this. So this is not number 5. Check note 5. So we should talk of 35. You are not supposed to expense lease payment. Therefore, so what you get will be the operating profits. Operating profits. So operating profits start from 292 downwards. So operating profits is 152 according to, oh no, okay. Mtu alete figure ingine. How much should be the operating? 292 plus the kit minus the 3. Paris Consolator, 117 to 50. 117 to 50. Finance cost, working 5. Check for me finance cost in working 5. What did we get? $10,000. So profit before tax will be 107 to 50. Then income tax. Working 4. Working 4. How much? No. So yeah, working 4, but there was deferred. Deferred tax. The one which we said goes to P&L, it was how much? Check your deferred tax account. The one we said should go to P&L. Check for me, it was how much? 1,300, somewhere here. Then current tax. It was an increase, so increase is an expense. Current tax, check note number 9, 35. So it will be 36,300 in total. Therefore, if no concern, how much is PAT? How much is the profit after tax? PAT will be how much? So I'm being told 70,950. Other comprehensive income. Other comprehensive. So other comprehensive, check trial balance. Check trial balance. Check trial balance. So in the trial balance, you'll be able to see there was revaluation somewhere. I saw revaluation somewhere. Land revaluation reserve. 1, 2, 3, 4. Fourth last. Fourth last. So there is revaluation. There is revaluation. Reserve. So revaluation. Reserve. So revaluation reserve, which your eyes can capture, is 21,000 somewhere here. Then there was less deferred tax. Deferred tax. Deferred tax on revaluation. Deferred tax on revaluation. Check. I think it is that working for. Check. In the deferred tax account, there was taxation on revaluation. It was how much? There is some tax we charge on revaluation, 900, Daniel. So 900. So this one you subtract. You take 21 minus the. Hapana, ngoja, someone is saying something. Not one. Oh, actually, that is the one we are supposed to use. Yeah, Wesley, that is the one I'm talking about. Please, we cannot use 21. Land was to be valued upwards by 3. Actually, you need 3 to recharge. I'm using a wrong one. The one I'm using is the opening. The revaluation should be 3. It should be 3. It should be 3. That is the one we are supposed to be talking about. Upwards by 3. So you take 3 minus 9, you get 2100. Actually, it is the 3 which is appearing in note number 9, the one which we taxed. So total comprehensive. Total comprehensive income will be 70,950 plus 21. How much? How much do you get that effect? And it ends there. That will be 73 something. 73? What has happened? 73,050. 73,050. Installment tax paid. In accounting, you bring all of them, whether paid or not. So installment is just a communication that of the total current tax of 35, ukienda kwa balance sheet. In fact, you will remind me, John, when you go to the balance sheet, you subtract the installment which has been paid so that you remain with the remaining liability, because once you pay it, it's no longer liability. So in the balance sheet, current liabilities, you will take 35 minus that installment. But in P&L, you take everything. That installment is still part of the current tax. So we will subtract it. Okay, if there is no other question, let's go to Roman 2. Let's go to Roman 2 if there is no any other question. So Vista Limited statement of changes in equity for the year ended 30th September 2021. So ordinary share capital shillings are in thousands. Share premium is there. I'm picking them from the trial balance. So share premium then there was revaluation reserve also in thousands. There was retained earnings also in thousands. Then there is total. Have those ones. Those are the ones appearing. The stocks balance brought down. So balance is brought down, check them. Ordinary Boko Chini, 1, 2, 3, 4, 5, 6. 6 the last. So ordinary share capital is 200. Share premium is 119,400. Revaluation was 21,000. Retained earnings at last 130,100. Give me the total across. Please don't copy mine. Make sure you are seeing them. Then you give me the closing total. The total I've been given to be for 70,500. Thank you. So let's start analysis one by one. Kisonga, I can confirm there was nothing on ordinary. There is nothing on share premium. Revaluation, yes. There was revaluation gain. Revaluation gain. But that not one of 3,000. You can still remember. There was 3,000. Then there was deferred tax. Deferred tax on revaluation. The 900. It should reduce the revaluation. The 900. Like that. So revaluation tumemalizana. Then we bring here PAT. How much was our profit after tax? It will affect retained earnings. How much is the PAT? Check for me your income statement. The profit after tax, how much was it? How much was our PAT? 70,950. Thank you. 70,950. 70,950. Then dividends paid. There was dividends paid, which I saw in the trial balance. Can you check and tell me how much you are seeing for dividends in the trial balance? Actually, that is all. It will end there. Yeah, it is 80. I hope everyone sees the 80. So you reduce here with 80, with 80. That is all. Therefore, balance carried down. What am I even doing? This is 200. This is 194. Give me these figures. So give me the three, please. I don't know whether to divide. It can take our time, but not time. So James Munipatie, total of revaluation. Ladies, help me with the total of retained earnings. Then Rachel has given me the entire total. The entire total as per Rachel is 463,550. 463,550. So others to give me, as I've said, that will save us time. So gents, for evaluation, you are remaining with how much? Uh-huh. 23,100 gents, 23,100. For ladies is 121,050. Unless you are disputing those figures, I want us to go to the balance sheets. Unless there is a dispute, I want us to go to the statement of financial position. So before we go to the statement of financial position, I hope this is clear for everyone. We must do a working for PPE, property, plant, and equipment. Property, plant, and equipment. So I beg to delete this. So have PPE as a working. Property, plant, and equipment as a working. Sawa. So PP, I don't know if that is working 6, property, plant, and equipment. I can, si lazima tuchukue ile route tulichukua jana. What I'm asked to take the route for yesterday. So we can do it this way. Let's start with the land. Let's start with the land from top to the letter tukiteremka. Land was 140, but there was revaluation of 3. So land was 140 plus revaluation of 3. So that is 143. 143. Then we have buildings. Buildings is 300. 300 minus depreciation. There was no accumulated depreciation on buildings. So just subtract the depreciation, which we had charged on the buildings. Ama ilikuwa nayo, kama kulikuwa na accumulated, tunatoa. Yeah, there is accumulated depreciation on buildings. Check trial balance. My Wamenika accumulated depreciation building was 48,200. Minus, how much did we charge? Depreciation on buildings. It was under, buildings was under administrative. Check administrative, ratio 6. So this was accumulated, this was for the year. So take 300 minus this minus that. Alright, so that is 245,800. Then, after that, F and equipment, furniture and equipment will be 131,250 minus accumulated 87,050 minus this year we charged how much? Check for me furniture. Furniture is also under administrative. It was how much? Furniture depreciation came to? Someone there? 26,250. So give me this one here. Then motor vehicles. Tumalize hiyo ya kwanza. First, give me the answer. So that one came to 17,950. Motor vehicle ndio tukue very keen. Let's be keen. Motor vehicle light iko hapo, so I have to work on the lights. Like that. So motor vehicle is 120 minus accumulated 22 minus this year, unajua zilikuwa mara mbili. There was motor vehicle which went to cost of sales, another one went to distribution. So you can give me the two of them. How much? How much? How much? How much? The one which went to cost of sales was how much? 24,000 and 6,000. No? 24,000 or 2,400. Gross and Rachel na clash. Which is which? Someone to harmonize, there is 600. So 24,000. So 24,000 and 600. And 6,000, I mean. So give me the entire amount. So how much is remaining? The difference? The difference? 120 minus 22 minus 24 minus 6. 68,000. Good. Then we have, there was the one which was leased. Leased property was 50. If you can recall, we depreciated 10. We depreciated 10. So remainder was 40. According to me, that is all. So can you add? Add for me this total. Rachel, 514,750. Someone to confirm as well, confirm. 514,750. Thank you. So let's write here, Vista Limited statement of financial position as at 30th September 2021. So shillings are in thousands. Like that. All right, so people are ready. So non-current assets. Non-current assets. Non-current assets. So we have PPE, working number 6. We have gotten 514, 750. Then investment property. Investment property. There was revalue. Check note number 3. Note 3. Note 3. Check note 3. 25. Only. Kuna kitu ingine. Can you add for me those two? You take the revalued one. Sorry. How much? So that one is, answer. How much do you have? 539, yes. 539, 750. Good. Current assets. So let's go the other side. Current assets. Inventory. Inventory, remember there was understatement. There was understatement of 5. So that one you will add. Kwa stock you add it. Kwa cost ndio tulitoa. So, where is inventory in the trial balance? Sasa iko wapi? Kama kuna inventory lazima ikue. Inventories 41, yeah, obviously 41 100. So you will check 41 100 plus the understated. It was 5. So it will be 46 100. 46 100. Receivables. Receivables. Receivables, the one I'm capable of seeing. Where? Trade receivables. 42 600. Minus, check note number 4. Check note 4. Check note 4. The company has assessed the expected credit loss on trade receivables. So expected credit loss, you need to subtract. How much did we get for expected credit loss? We have taken it to administrative. So check your administrative. How much was the expected credit loss? 55.50. 55.50. So ECL. ECL stands for expected credit loss. So how much is the difference? That minus that, what will you get? How much will you get after subtracting? You get 37,050. 37,050. Then bank and cash. Bank and cash, I saw a balance of bank and cash 79.50 only. Can you add for me those current assets? Add for me the current assets. $91,100. Total assets. Total assets. The route we have taken, we are finishing in the next few. Total assets will be how much? 63,0850. 63,0850. So 630,850. Equity and liabilities. That one is not going to be a problem. Equity and liabilities should not be a problem. Equity and liabilities. Ordinary share capital. Ordinary share capital. That one I can remember. It was 200. Pick them from the statement of changes in equity. Share premium. Share premium. I also remember was 119,400. Then there was revaluation. Reserve. Then there was retained earnings. Retained earnings. Those three. So let me check from the answers you gave me. You scroll upwards, Nione. So revaluation came to, thank you, Rachel, 23,100. 23,100. Retained earnings, 121,050. Give me the total. The total of equity. So, total ilikuwa ngapi? 463 Abigail. 463,550. Have that. Then we go to non-current. We are almost there. So non-current liabilities, we have 10% loan stock. 10% loan stock, the second last. The second last, it was 50,000 in the first column. Deferred tax. Deferred tax. Can you check for me deferred tax carried down? Deferred tax carried down in the deferred tax account. The deferred tax carried down in the deferred tax account, it was how much? That is 1,300. Was it 13? No, that was P&L. So, yeah, it was 15,000. Please check keenly. It was 15,000. 15,000. Then there was lease obligation. Lease obligation. The long term was how much? We had In the lease amortization, check for me lease amortization, the one which we said non-current. Was it 33 or 39? Check for me that figure. 39 rows, 39,500. 39,500. How much is the sum of non-current? How much is the sum of non-current? The sum of non-current will be how much? $104,500. $104,500. Then current liabilities, payables. Payables as usual. So check for me payables in the trial balance. We are looking at trade payables before ordinary shares. Trade payables was 19,800. Then current tax. So current tax, John, this is now whereby you bring your 35. You bring 35 minus 35 minus the installment. Ukilipa installment unapunguza liability, but in the profit account you recognize the entire amount. So how much was installment tax? I'm looking for it. Yeah, I've seen it. Installment was 22,500. Please check to confirm. So minus 22,500. How much is remaining? When you have paid installment, you need to less. How much remains? How much remains? Lease obligation, I'm lost. John, I'm bringing in shortly. How much is the 35 minus 22? What do you get? 12,500. Lease obligation, at once. So we have another lease obligation. The short term. John, check where we did lease amortization. There was the long, the non-current, and the current. Check your lease amortization. I don't know if it was working for thereabouts. Lease amortization. How much was the long term? Long term, I can see Rachel, 55. John, confirm you have seen it. The short term, the current. Yeah, good, 55. So the short term was 55. Then there is this item which is of big concern on my side. And it's the last item. This note number 6. Note number 6, please. Let's check note 6 to wind up. The company is yet to account for redundancy costs. Yet to account for redundancy costs. So it is a provision. It has not been paid. They are making a provision. So redundancy payable, they have not paid. So redundancy, that is 25. Can you add for me the current liabilities? Add the current liabilities so that we can wind it up. Add the current liabilities. $62,800. Now tell me the total. The total is what is 463,550 plus 104,500 plus 62,800. Check whether it is balancing. Someone today calling herself or himself something. is saying balanced. Someone else also to confirm what the person is saying. It is in order. Is that in order? Dear students, Abigail and every other person there, balance. So balance is 630, 880, 850. So that is how that question was supposed to be approached. Yeah. So now, when we meet tomorrow, God willing, December 2021. December 2021. December 2021, question 5, page 25. That will be our last question. Yeah. So unless someone has a concern, allow me to end the class at that stage. I want to ask, before we log out, compare group and published up where we have reached. Where we have reached now, you can gauge. How can you compare the two? Daniel now has changed to group. Wesley anasema published is way better. So kila mtu ako na yake. So Daniel, wewe unafaa ushikane na Wesley sasa. Yeye akileta published, wewe unaleta group. John, published all the way. Abby, published all the way. This one is long but way better. Na kwa nini Kariuki ameona yeye anaona group to be better? John amejoin Karis hapo kwa group. Wesley, huko group we will just scavenge for that. Just revise thoroughly. So kesho we shall finish with this one published. Then next week we are landing in cash flow. So I like giving people long notices. I like giving long notices. Notice number 1. Next week on Sunday, please allow me to call you for 3 hours. Nilifanya projection, I need like 5 hours extra. So next week on Wednesday, on Sunday, maybe we will agree on time, but locate me 3 hours to skume kitu hapo kidogo. Because this one will finish tomorrow, then Thursday. The cash flow will take us only 2 classes. Thursday and Friday next week, we finish up cash flow. So I need Saturday and Sunday to wind up on ratios, so that the other week I can finish cash flow. Yes, I can finish. Ebu kidogo msilog out. I want us to do some small analysis. Let me check on my calendar so that we'll be specific. Please also check your calendar. Check your calendar. I'm looking for my calendar. So let's go with the calendar to be factual. So tomorrow is 29th. We shall be done with published. Then next week, so without the makeup, next week will be on Thursday is 3rd. So I need 3rd and 4th to finish on 3rd and 4th to finish on cash flow. Then 5th. So nikiweka 5th with the Sunday 3 hours, we will finish ratios. Then on Thursday of 10th, 10, 11, 12, I need those 3 to wind up on partnership. So it therefore implies that I will need you again on that Sunday. On that Sunday of 13th, I will also require you for like 3 hours. So on that Sunday, I will need you. Then Thursday and Friday of 17 and 18. So if you give me those two makeup classes, then I will leave you on Friday of 18th. Friday of 18th, because your exam is likely to start on, when is your first paper? When is your first paper? When is your 23rd? Your first paper is FR on 23rd, Wednesday. So it means me leaving you on that Friday will give you sufficient time to revise from 19th, 20th, 21st, 22nd. So kindly for the, I was even to give you this Sunday, but that will be quite short notice. But for the next Sundays, allocate me at least 3 hours, 3 hours. Then we'll finish the class on 18th. So thank you. Let's meet tomorrow at 11. But hapana. No, tomorrow we have online, pure online. In fact, I wanted to say tomorrow, let's start at exactly 11. Exactly 11 without delay because of 1, 2, 3. Otherwise, thank you. Have a blessed night. Sometimes you can now log out.